We were just arguing that this would look like a typical bull market recovery. And for some reason, I think I saw the price of Bitcoin again, and I was like, whoa, this thing just went 10x in just a few years. And so, I've covered stocks enough to know that sometimes when something does a 10x, it means there is something to it, not that it's a bubble. I mean, from the shorter lens, this incoming administration, I think, is doing things that look very disruptive at the moment, but I think structurally are really positive, because it's a path for U.S. deficit to normalize, and I think there's still plenty of disruption ahead, including crypto. And I think Bitcoin is still our favorite idea for this year.
We get the optimism about Trump, then we get the correction until we get the actual news story. Where do you think we lie on this? Is this an overbuild and everyone's going to write off a whole bunch of capital? Or is this still too early to say?
Tom Lee remains confident in Bitcoin's future, emphasizing that its rapid growth is not just speculation but a sign of real adoption and value creation. He points out that when an asset multiplies in value significantly over time, it often indicates structural changes rather than just a bubble. Comparing Bitcoin to past technological breakthroughs, he suggests that financial markets are still underestimating its long-term potential. With institutions like BlackRock and major financial firms increasingly investing in Bitcoin, the market is seeing a shift toward mainstream acceptance. Despite recent price dips, Lee believes the best is yet to come for Bitcoin investors. Looking ahead, Lee predicts that by the end of 2025, Bitcoin will experience one of the most significant price surges in its history. He attributes this to the rapid increase in active crypto wallets and the introduction of Bitcoin ETFs, which make it easier for large institutions to gain exposure to digital asset. As corporations like Apple and Amazon begin leveraging ETFs to acquire Bitcoin, demand is expected to rise sharply. Lee also argues that traditional economic indicators, like labor statistics and inflation metrics, are often manipulated to fit a narrative, making Bitcoin an attractive alternative that operates outside of central control. With a growing number of institutions and investors entering the crypto space, Bitcoin is positioned as a key player in the evolving financial landscape. Lee believes this shift will lead to a significant redistribution of wealth, with Bitcoin emerging as the best-performing asset of the decade. As more industries integrate digital currencies into their ecosystems.
I think the story arcs are pretty bullish right now. From the shorter lens, this incoming administration, I think, is doing things that look very disruptive at the moment, but I think structurally are really positive, because it's a path for U.S. deficit to normalize. And I think even though things like these consumer confidence reports don't show it, and we know that there is tangible drivers of productivity, including AI, in front of us, that justify investors allocating capital. And of course, there's still plenty of disruption ahead, including crypto. I think Bitcoin is still our favorite idea for this year. So we think it'll be the best performing asset class, even better than gold. But I think anchoring all of this is a demographic story. I can send you some charts later, but if we look at the number of people aged 30 to 50 in the U.S., that's actually been steadily rising since 2009. It actually went positive in 2016. And what I mean by that is the number of people aged 30 to 50 matters in an economy, because they're the ones that are driving both credit consumption, but also productivity, innovation. Yeah. And then there's a contrast, because as you know, in the rest of the world actually has a depletion of population. And so that's creating the demand for AI workers, which is what the US tech companies are producing. So I think that this does feel like it's going to be a very bullish equity cycle ahead. And that's why we're constructive. And it's been a rough start for this year, but I think we're just sort of getting through some of the kinks and burning off some of the recent bullishness.
But where do you think we lie on this? Is this an overbuild and everyone's going to write off a whole bunch of capital? Or is this still too early to say?
People who are going to call the top in data center demand have never really experienced industrial cycles, right? Because the cycles actually are going to extend until return on invested capital is well past negative. And I would be very surprised if we're already reaching that saturation now, because we know that any model today would have improved capabilities if you improved computing power or capacity. So we aren't even experiencing the negative side of that utility yet. So I think that it actually would still argue that you need to be investing more capital. We did spend about 4 months doing a research white paper on Bitcoin. And then in 2017, I remember just for some reason, I think I saw the price of Bitcoin again, and I was like, whoa, this thing just went 10x in just a few years. And so I've covered stocks enough to know that sometimes when something does a 10x, it means there is something to it, not that it's a bubble. Like most people, I think, tend to think if something's gone up a lot, it's a bubble. But actually, in the equity world, a lot of times it's actually telling you something's real.
Particularly when it's a network. That's the big difference.
Yes.
Networks tend to do this much more consistently.
It's exactly what you said. First, we found that if you just did a very simple two-factor model, which is the number of wallets and then activity per wallet, it explained over 90% of the rise of Bitcoin since inception.
Yeah, and it's a good approximation for Metcalfe's law. It's the best way I got of fitting Metcalfe's law to the network value.
That's right. And then, we realized that's exactly why social media networks created value. Because, I mean, the idea of like eyeballs and someone being the customer, and then because it's free and you sell them out, like that was a very new concept. So to me, I had already believed in this idea that you could create businesses digitally that didn't start with a factory. And so we published our first report on Bitcoin. It was around $1,000 though. But we said that by using the same two-factor model by 2022, it could be $25,000. And that was either saying it was going to be worth 10% of gold or the number of wallets were going to increase. I don't remember the whatever assumptions we used. Of course, I was advocating for Bitcoin. We recommended 2%, but it wasn't something that we thought we would hang our reputation on. But it created immediate backlash for us. Of course, I was advocating for Bitcoin. We recommended 2%, but it wasn't something that we thought we would hang our reputation on. But it created immediate backlash for us with our institutional client. So we actually got famously fired by several well-known hedge funds.
Tom Lee remains optimistic about Bitcoin's future, asserting that its impressive growth is a clear signal of its real value rather than a temporary bubble. Despite recent declines, he believes Bitcoin's potential is far from being fully realized. He points to the growing involvement of major institutions like BlackRock, which is driving the demand for Bitcoin, particularly through the launch of Bitcoin ETF. Lee predicts that by 2025, Bitcoin will see significant growth, driven by the increasing number of active wallets and institutional investments. This, he suggests, will ultimately lead to Bitcoin becoming one of the best-performing assets of the decade. In addition, Lee challenges traditional economic metrics, arguing that they often manipulate the true state of the economy. Bitcoin, in his view, serves as a hedge against such manipulations and is quickly becoming a mainstream asset. As companies like Amazon and Apple use ETFs to invest in Bitcoin, they will drive further demand, creating a significant imbalance in supply. Lee believes this growth will be a pivotal moment for crypto, ultimately reshaping the financial landscape by making Bitcoin more accessible to a broader range of investors and accelerating its role in the global economy.
But then I assumed we were probably onto something, because I figured if someone...
Yeah, that's right. When you see that reaction, it's probably right.
Yeah, because if someone hates it, they haven't done the work.
Yeah.
And so now it's almost 9 years later, eight years later. And Bitcoin's obviously done really well. It's actually had cycles, and you've been involved for a long time too. I remember you told me you got involved like in 2014.
2013,
yeah.
I wrote the first ever macro strategy piece on Bitcoin in 2013.
Wow. What if that was the report John Norman saw? And that
might have been,
right?
Might have been. All the hedge funds, everybody passed it around because it became this thing of like, so I onboarded everybody from Dan Tapiero to Mark Yusko to, you name it, all the macro people was all because of me. John Burbank, you name it.
I might say that might have been your report, because I don't know why John Norman would have brought up Bitcoin. The thing that is the most non-fungible,
That's
right?
right.
The most,
That's exactly right.
yeah, yeah, that's a good point because you're right. We're going to be polluting and corroding so many human experiences, especially like with android robots and fake friendships, and and oh, that was the post 2000 period was really interesting and you're hitting on it because the bubble burst, and it was a terrible 2-year drawdown, maybe almost 3 years. But two really interesting things happened. One was value stocks actually ascended. So there was an ascent of a new class of stocks that really did well. But then in the middle of the center of where the bubble burst, okay, where huge deflation took place, because all of a sudden fiber prices deflated and service and provisioning prices collapsed, that a new class of tech stocks emerged as winners. And it was the eBays and the Expedias, because all of a sudden their business models worked because fiber became cheap. And so you had high gross margin businesses, and actually the winners of the post-internet bubble collapse were internet companies, basically.
Tom Lee, a prominent Bitcoin advocate, believes that despite recent downturns in the market, Bitcoin's long-term potential remains incredibly strong. He argues that Bitcoin's price growth over the past few years is a sign that it's not just a bubble but a legitimate asset with real value. Lee highlights the growing adoption of Bitcoin by major institutions, with Bitcoin ETFs becoming a key factor driving demand. This, he believes, will set the stage for Bitcoin to experience one of its biggest price surges yet, making it one of the best-performing assets in the coming years. He points to the continued increase in active crypto wallets and institutional investments as signs that Bitcoin's future looks bright. Lee also challenges conventional economic metrics, which he believes often manipulate the true state of the economy. He emphasizes that Bitcoin, detached from these traditional financial systems, offers a valuable alternative for investors looking to hedge against economic uncertainties. As major companies like Amazon and Apple start investing in Bitcoin through ETFs, the demand for the cryptocurrency is set to soar. Lee envisions this as a transformative moment for the global financial landscape, with Bitcoin emerging as a mainstream asset. Do you believe Bitcoin's surge in adoption by institutions will drive its long-term growth? How do you see Bitcoin impacting traditional financial systems in the next decade? Share your thoughts in the comments below.